part what I'm watching. And then as for the options, I'm taking a mix of a couple different things. Primarily, my main focus is going to be SPY. So these aren't up much from when I started tracking them. The main holding is going to be around November 21st. And I have a few October 17th, but the big bulk of my position is going to be around December 19th and November 21st. So November 21st, for example, excuse me, let's overlay SPY on this. So here's SPY currently at, this is SPY, by the way, the purple and orange. You have SPY here at all-time highs. You have these puts trying to base at around 1.1, 1.2K. So ideally, the goal is to buy these contracts right here for roughly around 1.2K. And then right into this high, they're already going to be trading around 2K. So these lows here, which is, what value is that? 655. So if we come into the 655 area, these are 670 puts, by the way. So just on this drop, these should gain about $15 of intrinsic value, which is roughly what we are aiming for here. So this $15 gain into about the 2K mark. And if it pushes us any higher, or if SPY drops any further from that range I said we were targeting, that's basically free money. So every dollar from here on down is additional premiums I will be pocketing. So from 655 all the way down to like 625, about a $25 range. That's your potential profit other than this range. So it's a really good range to the upside on those puts, super clean range to the downside on SPY. So again, that's one of the trades I'm holding on to. I think it should pay pretty well, and it's a pretty straightforward trade. You could buy it here into the lows, and all you got to do is just be patient and sit on it. If we start breaking out towards new highs, then the trade setup is going to be invalid, and I would take those off. But for now, I think the setup is valid, and it's a pretty straightforward trade. Like I said, you don't get too many clean setups like this where you're able to just load them and sit on them for 2-3 weeks and get paid out. So that's what I'm watching. UVXY also has a pretty good setup here into the lows. I picked up a couple more shares of UVXY, some options. I picked up some shares and options on Success as well. This one has a bit of a gap, has not closed it. So ideally into this week, I want to see us close this gap and then see if we manage to push above that buy gap. We have another buy gap up here, some buy side liquidity. So Success looks good to the upside. And then if you look at its counterpart, which is semiconductors like NVIDIA, you had your all-time high sweep, structure shift to the downside. And now I just want to see if we can get that follow through. But just about every chart I have bearish setups on. You have open gaps to the downside here, some south side. So I know you mentioned maybe taking a few longs here and there just since the market just keeps going up and up and up. I don't think that's going to be the case anymore. So just be careful if you do take any longs. I have a few clients who have been telling me, hey, like I'm so good at trading on my, my entire portfolio just keeps going up and up and up. And, realistically, that is the case at the moment. And that's what the market maker, wants. The general public, even with very little trading knowledge, you could have just about thrown your money at anything, whether it was Tesla, NVIDIA, you name it. In the last 5 years or even in the last year, if you've thrown money at anything, you're probably making money. There's very few names that are probably down, and that's what I told them. Doesn't matter what you put it in. Realistically, you're up. You're doing okay, and that's what they like people to get into that sense of just throw it at anything. You'll make money. And people have been throwing 100K, another 100K, another 100K, and unfortunately this game will come to an end, and everyone who has just been dumping money like crazy the entire way up and their ports just keep going up and up and up, there is going to come that day where those profits that you've been sitting on for the last 5 years where you're up over 600% on a stock, those gains eventually are going to get wiped. So I advise a lot of them to take profits. We'll see what happens, but that's what I'm planning for here into the month of October. Mm-hmm. So the first thing I'm gonna ask you is this strictly a trade or is this protection? Because it varies. There's some people who tell me, hey, I have $1 million in, SPY, VOO, etc. across these specific stocks. I can tell you, okay, take 10% of your portfolio, throw it here. But if you want it just as a trade, that's different. So are you using this to protect your investments, or is this just a trade? Okay. So I'm assuming you started averaging around what, 15 maybe? 15, 16? So to be honest with you, I'm not gonna lie to you. I've been picking up shares of UVXY for quite some time too. For me, this is not really a trade. Yes, it is a trade, but it's more so an investment towards the crash. I also picked up a few shares when we bottomed out into these lows before OPEX, into 15s. I realistically thought we wouldn't go under, when we came into these lows, we got another low. So I'm just being honest with you. Like I said, every time we've been basing, I'm buying more shares on UVXY. As for options, I barely started putting in options trades here into these lows because I like the divergence we created. The divergence I'm discussing is SPY put in new highs and UVXY never put in new lows. So you have this divergence here, which was my green light to say, okay, I'm going to start putting those contracts on, being a little more aggressive. But on the shares, I am down a bit. So, I just want to be transparent with you. I don't want to act like, oh, why didn't you wait to buy till 1050? I didn't do that myself either. I like the trade. I like the price of the share, and I've been accumulating it. So if you're down a bit on shares, not great, but it is what it is. If you want to add a bit more shares, you can. But the best bang for your buck at these prices is probably going to be those option trades. Um, so what I would try to do, again, I don't know how many shares you have, but I would try to put on options. Let's say you have 500 shares, for example. Then at minimum, I would want you to grab 5 contracts. And again, you don't have to. It's just trying to explain to you how the numbers would work out. So if you have 500 shares and they're down at the moment, if you put 5 options contracts, for example, when those options do pay, they'll cover whatever potential losses you have at the moment on the stocks. If you want to add more than what you currently have on stock, that's fine, but at least I would try to add 1 to 1 on the option side. So with that being said, the last time we had a correction here, which is the April crash of this year, not a crash, it was a correction. We had a 200% move in 47 days. So roughly planning for a similar move from here. You give it 47 days. That is going to put us into November 18th. So which is why I'm telling you I'm planning around that November 21st expiration. If you want to grab a bit more time for December 19th or even the January contracts, that's fine. But the majority of my positions are out to that November expiration. So I'm targeting that 47-day deadline with November. If you want to grab a bit for December and January, that's fine. But I think November should be okay to hold this down. Um, Ideally, I want to get rid of. Uh, Honestly, it depends how fast they pay. If they pay ridiculous, I'll probably trim more. But assuming it pays according, following the path, doesn't get too crazy, I ideally would want to sell, 50% of my positions into 50, 100% on the stock. Originally, I did not want to trim half of the position up until 30. The only difference is when I started getting in, like I said, I was at 15. So 15 to 30, that's 100%. Now from $10 to 30, it's not 100%. You're talking about a 200% gain, which is realistically a little harder to obtain. Not saying it can't happen. It happened in the last run. I just want to be more conservative with my targets so I don't get burned. So realistically, if I were to get 17.5, 18.6 around here, I'm gonna be taking a decent chunk of my trades off, and then anything higher is, you know, amazing, great if it comes, but I cannot really. I have a bit of money on this, just, you know, so you kind of get my gist. Like, I don't really want to fuck this up. If I get paid out into here, I'm gonna just take my profits, let the rest run. Uh, but this entire um, this entire chop low. Come on. This entire chop lower has costed me a bit of money. So if I see some relief back into these highs, I'll probably take some risk back off and let the rest run. Success is the one that I did not have much size on. I barely started throwing size on this one. I have a little bit not better expectations. I have high expectations for UVXY as well. The only difference is I traded this one a little better, so it gives me more room to you know, play with the results per se. So Success had, where is it? I think I need to go to 3 hour. It's not gonna show up here. But there was some liquidity left on Success, which is the reason I had not wanted to short this. Sorry, not to, hadn't want to long. Here it is. Yep. So back here when we were basing in August, when UVXY also appeared to be basing, I did not want to go long just because we had left the south side liquidity and we had not filled it. Here, it missed it by pennies. And I told everyone in the team, like, hey, we're going to go fill that wick. Just be careful if, you know, trying to short semis, we're going to go fill that wick. Sure enough, we eventually came, filled that wick, and then had a pretty big move down. So I'm glad I waited for that south side liquidity. Once we filled that south side, had that entire move down. Now at these prices, you know, I'm a lot more comfortable loading up, which I did. My average, I think, is like 465 on this one for stock. And then I just put on the options, which are already green as well, if I'm not mistaken. I got to check. But it's the exact same setup. You would want to go long Success out to November 21st. If you want to do a second batch out to December, that's fine. If you also want to do a bi-weekly batch, that's cool too. So let's say you take a bi-weekly to deliver, you know, $6 or something. This would be delivered by the 17th. The 17th is here. So you have this entire block of time. You could grab time out to the 17th. Any upticks are going to be your profit. And then your contracts would expire by the 17th. You would definitely want to take profits on those, you know, here, wherever on the way up. And then after the 17th, you could let your November contracts keep running, assuming we're going to continue heading up. So that's one way I'm trading it. Don't throw too much money on the bi-weeklies. If you do decide to take them, just do a fraction of what you're putting on November. I think November is enough time and it should align with everything to pay you out. If you want to be better safe than sorry for Success or for UVXY. So I'm loading the 10s. If you wanted to do 11, it's not a big difference in premium. I just, you know, rather be in the money. But realistically, in terms of premium difference, it's not a huge difference. So I loaded in the money. UVXY, I got the 10s over the 11s, and then Success, I got the 5s over the 6s. But again, the price isn't too much of a difference. So it's your call which you decide to take, but ultimately I prefer the, you know, closer in the money or at the money. And then as far as expirations, for Success, I only have November and January. I have no Octobers on that one. And then for UVXY, I do have the October 17th and then the Novembers and the Januaries as well. I think pricing, they're priced pretty well, to be honest with you. They are obviously a higher IV ticker as opposed to SPY. So SPY IV currently, don't quote me, I'm not sure, but I think it's around 16%, 20% roughly. So pretty good. The IV on UVXY and Success is higher, but I still think in terms of what you're paying, I think they're at good values. So this is the watch list. You know, I've kind of been tracking. Tesla was a crazy trade. I did not take it. It sucks. It is what it is. Tesla had been waiting for a sell. It's the same exact setup we have on NVIDIA and everything else. This one just over-delivered a bit. Came right into the area I was watching for a potential reversal. And I just simply did not take it. I was too busy with a couple other trades. This was right at the open, that's why. Yeah, exactly, right at the open. So I was busy with a few trades. We had this, didn't end up taking it, but in just 2 days, I think Tesla fell maybe, what, 15%? 12. 12%, 12.5. That's still pretty steep. So in 2 days, a 12.5% drop is insane. If we were to get something along those lines on SPY, you know, just imagine a 12% drop in 2 days. This is 2%. So 2%, yeah, 2% puts us to the bottom of the range at 660. So imagine if we were to get a 10% drop on SPY. This is just 3%, $20 drop to that 655 bottom of the range. And then once that 655 is taken out, like I said, we have this entire cluster to the left. Not much solid support. So like I said, once we take out that 655, I think we're going, you know, straight lower to these downside targets. We haven't had a big down day as of late. The biggest down day we had, yeah, nothing significant here. The biggest one was probably back in April. We were doing 3.5% in a day. So I get it. Does not seem feasible, does not seem likely. You know, but what would happen if we start getting those 3.5% days down in one day? This is pretty insane. We'd take out the entire weekly range in one day. I mean, not insane if we're being honest. If you didn't think the move up was insane, you can't say the move down is insane. But both sides definitely, you know, moved quite a bit. LLY is on my watch list right now. I don't think you trade. Well, we just take off the trades. You're saying in case you did take the shorts and we continue going up? So look, I'll give you one name which I do want to see go up, just because we have not met buy side liquidity yet. So let me show you. Hold on 1 second. I did share this list you see here. I shared it in the Discord. These are mostly swings. I'll go over them right now, and then I'll tell you if you want to DM me, you know, what amount you're gonna be starting with and all that. I can definitely help you out, you know, in private, let you know what I'm watching. But I think you're gonna be good right now, bro, just because you're getting started at such a good time in the markets. For example, if you were getting started a week or two ago when the markets didn't have much, they did have direction, there were clean moves, but there's times like right now into next week, which like I said, we're gonna have these super clean trends in the market. So it just makes it very easy, or easier, not very easy. It makes it easier to scale those smaller accounts because you have clear direction, clear trends, big moves in the day. So it allows you, you know, to really stack positions and whatnot. So I think you'll be cool, bro. If you want to get started this week, that's actually a perfect time. So yeah, I'll help you out with that. Yeah, just because I don't know if you want to, you know, just air it out right here in public and whatnot. But yeah, I got you, bro. Trust. This week's going to be good. So this is the name I was talking about. So Rossimo, you're telling me, I don't know if you rather I call you Robert, whatever. But so this is the one I'm watching, Apple. Apple, I've been waiting for buy side liquidity, and you're probably going to ask, what is buy side liquidity? Where is that coming from? You simply look left. So if we zoom out on the daily, that buy side liquidity, all that is an all-time high sweep. So we left this wick on the daily, which does not look so great. It's a little more evident on the 3-hour, but regardless, you see this wick here. So this is your target for the buy side liquidity. We're pennies away. No, not pennies. We're about $1 away. So this is where we currently are. Let's get rid of this mess. This is where we currently are. I really want to short Apple. And it's also going to be your confirmation for more sell side on the rest of the market. The only problem is we have not met that buy side liquidity. Like I said, we're about $1 away. Friday's high to buy side liquidity is only 85 cents away. So ideally, what I would want to see into this week, one, take out that buy side. Once that buy side liquidity has been swept, it just becomes a matter of getting that market structure shift back down to the downside as mentioned. So same way we had that structure shift on Tesla already, same way we had that small structure shift on SPY. I want to see the same thing happen on Apple. So move up into BSL is first step. If it does squeeze a tiny bit higher, that's fine, as long as we stay below 265. If we start pushing above 265, this is going to be my exit 110%. And if Apple's heading higher, SPY's heading higher. So there's no way Apple's coming up, SPY's going down. So realistically, like I said, buy side liquidity. Once that happens, I want to see market structure shift back down to the downside. But I am not looking to short until that buy side liquidity has been met. And again, this is going to be an added confirmation and confluence on top of the SPY setup I already have. So I'm not 110% confident on the sells. Once we get this, then sure, I'll tell you, hey, I'm comfortable shorting SPY and Apple blindly, but only after the confirmation. At this moment, I'm pretty certain that's the route we're headed. But until I don't get this additional confirmation here, I don't want to be too sure. I'd rather be safe than sorry. So this week, that's one thing I'm going to be watching early on. Sweep buy side liquidity and get a market structure shift back to the downside, and that would coincide with more selling pressure on SPY. So if by Monday, Tuesday, I get that on Apple, which I'm pretty sure we probably will, you pretty much have the green light for those sales. But like I said, if Apple does continue squeezing up into 265, even above it, you will see another push on SPY, which at that point I would take off some size or add higher. It's your choice depending how much size you already have on. If you structure your trades in a way where you could add higher, that's an option. If you already kind of put on all the risk you really wanted to, then you could de-risk and put risk back on, slightly higher. But realistically, I don't think they'll go much higher. We'll see what we get. Maybe I'm wrong. But ideally, I want to see that buy side liquidity swept, revert lower, and Apple comes down and brings SPY down and the rest of the market with it. I think Tesla was a leader last week. I don't need 15% or 12.5% in 2 days on the rest of the market. Even if I get a third or half of this, I'll be more than happy. So if we can get 5% or 2.5% on SPY roughly or more in a week, that's super good. So 5% is something I'd be happy to get this week on SPY. If we get more, great. But for now, that's kind of what I'm aiming for on the weekly range. So from high to low, 2.5% is roughly, I think that's 655. Yep, 655. So if at the end of the week we're trading 655 or lower, or if at any point we trade into 655, I would call it a pretty successful week. If we only get half the range, still a good week. Can't complain. Still made money. But realistically, I would love to get that entire range into 655 this week. Do you guys want to go over any specific stocks? That's it. Essentially the market overlook. If you want to go into specifics like on AVGO or anything like that, that's fine. But for the most part, I do think the whole market should have a similar move. So AVGO is well off the highs after earnings. I did short after earnings, and I took the longs for earnings. This one paid pretty well. So we took the calls here into the lows. I think they paid, I think it was this day. Yep, this day. Then they had earnings after the bell. No, I'm lying. AVGO didn't have earnings. Who reported this day? It was let me pull it up. I forgot who reported, but it was oh no, it did. AVGO had earnings, and then who else had earnings? Doesn't matter. Long story short, this move paid pretty well. I think it was like a 15x if I'm not mistaken. No. Yeah, that's why I'm getting confused. I didn't take the earnings trade. I took it here. Who reported this day? I think it was Intel or someone. I don't recall exactly who reported. There was a buy. It was a sympathy play, and it did pretty well. So long story short, the longs paid, swept the highs, now came a lot lower, and it looks like we're going to continue down. IBM had the same exact setup already. So let's full screen this. IBM, as you can tell, off those highs, it delivered the targets and some. Then we bounced off of those lows into August. We are now coming back into the area we broke down from. But for the most part, I think NVIDIA, so this setup you see here is the same exact setup I have on NVIDIA. Only difference is it has not triggered on NVIDIA. So you go ahead and look at NVIDIA. This does not seem likely until it happens. But again, this is the exact setup I have on IBM. So for example, IBM, you have, I don't have an arrow to the upside. Let's draw in. So from the lows to the highs, that's good enough. We'll just copy this onto NVIDIA. Paste this. So pretty much it seems like, if I'm not mistaken, these are going to be potential targets on NVIDIA, assuming we follow the same path we followed on IBM. So as of right now, I have my preset targets on NVIDIA into the Southside liquidity at 127.74. If it follows the same path that that IBM did, it's most likely going to come down into as low as 90. So again, I'm not telling you these are guaranteed targets. I'm not telling you this is what's going to happen. I'm simply showing you guys how, I kind of go about these projections. I like to do cross pair trading. I like to analyze multiple pairs at once. And again, if we are going to get a similar move on on NVIDIA as we did on IBM, which IBM is currently leading, we should see maybe as low as 90 on NVIDIA. My target for now, I'm targeting, sub 130, maybe into 127. This would be a beautiful payout, about 33%. If they really want to give us that next, 20% into a 50% drop at Southside down to April lows, that is totally fine. We'll see what we get. If we get the sells into April lows, maybe we see a bit of a relief pop into these zones before the next leg lower, if there's going to be a leg lower. But at that point right now, we're getting way too ahead of ourselves. We'll see what happens into these lows once we get there, if we get there. So for now, I just want to focus specifically on this upcoming drop here, getting positioned, holding the trades lower, adding, doing whatever we have to do on that, scaling out. And then once we get into these lows down here, we'll assess potential opportunities for a dip buy, small relief pop, and then, we'll go from there. But from here on out, the next 2 months, from here to November, we're looking to strategically short anything that is elevated. So what stock was it? Was it Meta? I believe so. So one thing I want to point out, let's say we're starting the week. Today's Monday, we're getting started. One thing I don't want to do, or I wouldn't want to do, is short a name that is already down. So Meta, for example, or Tesla, it's down already about 10%. It's been coming down for about an entire week from the 19th until now. It's 2 weeks actually. So it has 2 weeks straight, just down action, down action, down action. Why would you want to short something that is already at the lows and you miss this entire move down? Why would you want to do that when you can take something like Apple that is literally still at the highs and you have that entire move down? So that's just food for thought, and I'm bringing this up because last week someone asked me to short names that were already into the lows, and I mentioned, why would you do that? So I just want that to be clear. Do not short names already at the lows. You want to focus on names that are still near the highs, like Apple. NVIDIA is still decent. SPY is decent. UVIXI at the lows and Success at the lows is decent for buys. So look for names at the moment that have not had their moves, and that's going to be your focus into the next week for the most part. Do you guys have any questions other than what names we're taking? So you get the sentiment. We're looking for shorts out into the next 2 months, out till November. We'll reassess day by day, week by week, and then I'll give you guys specific names I'm short and I'm looking to short and all that. But is there just any general questions about anything regarding trading or just anything other than something I've discussed? What is this L? Oh, hold on. I'm not hearing you. 1 second. What happened? All right, go again. Apparently my headset was off. I don't know since when you guys have been talking. My bad. To take. Are you talking on a swing setup or on a daily scalp? So there's a couple things I look at. There's well, more than a couple things, but primarily the number one thing, the number one thing is going to be the chart has to make sense. So I need to have some type of liquidity I can target. I need to have solid risk to reward success. For example, I have a solid buy target. One, I have a buy gap, levels make sense, hard to R, etc. So first things first, it has to make sense on the chart. How much am I risking? So let's say I'm risking $10. This is a $100 range. I know it's not, just pretend. So I'm risking $10 to make 100. So okay, that works out. Or even if it was 2 to 1, $10 to make 20. Okay, range makes sense. Levels make sense. You have targets, whatnot. All right. So first things first, it has to make sense on the chart. Once you can confirm that it makes sense, risk to reward, and everything on the chart, the next thing I want to look at is IV. I'm assuming you're talking options. So the next thing I want to look at is IV. How high is the IV? Generally, anything over 40% I am not touching. And just to let you know, UVXY and SOXS have IVs much higher than 40%. The reason I take those is because I know what I'm paying for. I understand how they work. But on a general trade, something like Tesla, Eli Lilly, anything like that, I do not like paying high IV. I'll do it here and there when the risk to reward really makes sense, but for the most part, I don't want to pay high IV. It just doesn't make sense in my opinion. So I've shared this page with you guys before, Market Chameleon, just to show you what I'm talking about. This is the current IV of the biggest names in the market. Nvidia is 35.4 IV, right? If you look at a name like SPY, you have 13.1. So you're talking almost 3 times the IV on Nvidia. Another thing I want you to take a look at is the stock price. You have around 670 for SPY and you have about 187 for Nvidia. So one thing to note is not only are you paying almost 3 times the IV, you are also getting less than 3 times the potential intrinsic value. Does that make sense? So that's just from a numbers perspective, it doesn't make sense. Why would you pay 3 times more for something that is worth 3 times less? It should be the opposite way around. I'll pay you 3 times more for SPY because it has 3 times more the money that I can potentially make. But it's backwards. You need to pay 3 times the amount on Nvidia and you can make 3 times less. So from a simple numbers perspective, it does not make sense. And I'll take SPY over Nvidia any day just based off of that logic. And that's what I've told people right now. You're looking for a swing, you're looking for a trade, take it on SPY. Why SPY? Because the numbers just make sense. I'm not telling you that the numbers don't make sense on Nvidia. You can definitely put that short in and still make money. But from the minute you enter the trade, not to say you're already losing, but you already have a bit of a disadvantage because the numbers are already working against you. If you look at something else like Berkshire, Berkshire's 14.7% on the IV. That's great. I don't mind trading that. Take a look at Tesla, 60%. That's insane. Like I said, the move the last 2 days was beautiful. You could have probably made over 5K per contract, but your initial entry was over 1,000 something per contract. So that's where IV comes in and all that. So one, like I said, take a look at the chart, make sure it makes sense to take that trade on the chart. Two, look at the actual, numbers behind the trade. IV has to be low. It has to make sense what you're paying on the premium and when you can potentially make. I'll show you that real quick just so you can see what I'm talking about. So I'm assuming you understand how options work. What should I do it on? Let's hide these stripes. Should be fine. Okay, so let's see, just a quick test right here, see if you somewhat understand how options work. So let's say you were loading, let's do 670. Whoops. Let's say you bought them at, just to make the math easy, let's say 500 bucks. Let's say these are bi-weeklies. So 10, 17, 670 puts at 5. Matter of fact, let's check the price. So let's make this a little more realistic. So what did I buy these at? I actually own those. The low was 460. I'll just leave it at that. I'll leave it at $5. So let's pretend you bought the 10, 17, 670 puts at 5, which is actually a realistic value. Again, the low the day on Friday was 460. The high was 675. So 5 is a realistic fill at the mid on the day that you could have potentially got. Okay, so now my question is, would you know how to price this option as it continues to drop? Like, do you truly understand how options work? Okay, so I'll take the time real quick to explain. First things first, what is an option? You guys hopefully understand an option is basically just the right to buy or sell shares at a specific price. So depending if you have a call, you have a put, you understand whether you buy or sell the option, you were either on the hook, you were obligated to either deliver the shares or the cost difference or whatever. So essentially the way it works, let's say I buy a call at 660 and then SPY goes up to 670. This is a $10 difference between my entry at 660 and the current price at 670. So that $10 difference is essentially the intrinsic value I captured in my potential profit. That is just intrinsic value. There's a lot of components to it. So there's delta, there's theta, there's gamma. I'm not going to get into all the Greeks. I personally don't focus Greeks too much just because I don't think it's too important. Yes, it's important to understand them, but I'm not calculating for them. So at the day of expiration, let's say today is October 17th, it's Friday, we're getting close to market close. These contracts are going to expire. So at expiration, nothing matters on a contract. At expiration, so think about it this way. Right now, your contract is worth $5. On top of those $5, you need to add all the deltas. So you're going to multiply it by time. So you're going to multiply it by time. It's going to add a little bit of premium. You're going to multiply it by the IV. It's going to add a little bit more premium. You're going to add, every single, sorry, I'm blanking out. Every single variable that I mentioned, like time, delta, gamma, all the Greeks only exist when there is time left on the clock. At expiration, your only value on that contract is the pure intrinsic value. What the intrinsic value means is how far are you in the money. So in this example, you bought 660 to 670, you're $10 in the money, your contract's worth $10. There's no time left or none of that, so none of that is added to the contract value. If you have this entire 2-week range left, for example, this is, think about it as $100 premium per day. So you add 100 for this day, 100 for this day, 200, 300, 400, and so on. As you get closer to expiration, your contract value starts going down, minus 100, minus 200, minus 300, closer to expiration. So again, at expiration, theta is worth 0. The only value on your contract is, again, that intrinsic value. The reason I'm reiterating this, and hopefully you guys get the gist, all I care about is intrinsic value. I do not care about theta. I mean, yes, you want to have time on the clock. You don't want to be taking 0 DTs and whatnot. But my main focus as a trader, whether it's stock or option, is you want to capture that intrinsic value. You want to have that move in your favor. So when it comes to calculating it, for example, here, let's say you bought the 670s at $5. Your cost basis is $5 lower. So I don't know. I think DJ, you're on Robinhood. I don't know who you're with, Robert, but I'm pretty sure you've noticed when you buy an option, it says something like break-even price. Have you noticed that before or no? Okay, perfect. So this is your break-even price. Do you understand why that is your break-even price? Here. Yep, but do you understand why 665? Exactly. So you paid $5 for the 670. You just subtract the $5 you paid from 670. That gives you 675. All that means is that, let's say today the contract is expiring. Today's October 17th. Your time has run out of the clock. No time left. And you paid $5 for that contract. To break even, you need to be at 665 or lower to make any money. So this is a $5 range. You capture these $5, but the premium and everything else, went down on your contract. So your contract is worth $5 here into break even. Your profit as a trader, and which is why I tell you guys focus solely on intrinsic value, is here. If we target these lows and actually get them, from here to here, you break even. No money to be made. If you get this move on Monday, you still have theta and everything else applied to your contract, so it's going to be worth more than $5. So you do make money. But again, all I want you guys to understand is the pricing, and the pricing comes solely from the intrinsic value. So let's say here we are break even. Let's say we get the next leg down. What are you doing? Come on. Let's say we get the next leg down into these lows at 654. But to make the math easy, let's just say 655. So we trade down into 655. Here you're break even. Now from 665 to 655, you're adding a whole $10 to your contract. So not only did you get your initial $5 back from here to here, your contract's worth 5 here at expiration, you can also pocket these entire $10. So this $10 would be your profit. This would simply be recouping your investment. So even at expiration, assuming we get out at 655 or below at expiration, again, those contracts are going to be worth $15. Why $15? Because you own 670 down to 655. That is a $15 difference. Your initial was 5, so realistically you're only profiting $10, but that's still, decent. And again, before I even enter the trade, I'm looking at two things. Like I said, I'm looking at the chart, looking at IV, looking at premiums, looking at all that. But before I even enter the trade, I want to make sure the numbers make sense. So in this example I just went over with you guys is an actual trade you can potentially take into next week. So if the premiums make sense, I am in this trade, by the way. So ideally, roughly paid around $5. I want to see us under 665 to be able to make any money by October 17th. Every dollar under 665 is my profit. But if the numbers were skewed and it was, the opposite, where I have to pay $10 for those contracts up here, now my break even is down to 660 and my potential profit is only $5. If this was the case, this does not make sense. I don't want to risk $10 to make 5. I'll risk 5 to make 10, but not the other way around. Does that make sense? So always, before you even enter a trade, you want to make sure that the risk to reward is in your favor, that it, you know, can happen. I don't want to set some super unrealistic expectations where I tell myself, okay, well, I need my contracts to be under previous monthly lows by the next week or by the next day or next 2 weeks to make money. This is really unrealistic. As a newer trader, I used to take trades like this. It's pretty stupid. I don't know why people would do that. I'd much rather take something really safe like this. Sure, it's going to cost me more money. Sure, you know, whatever you want to call it, but it has a much higher probability of success than something like this happening. So, one, always take the highest probability trade. Make sure the risk reward is in your favor. Sometimes, you know, it's just the draw of the luck. Sometimes, you know, the numbers were in your favor, risk was in your favor, everything was good. The trade just simply didn't pan out. That's part of the game. It's normal. It happens. But before you even get into a trade, you definitely want to make sure risk and reward is on your side. And like I said, if it doesn't pan out, it doesn't pan out. But that's essentially how I like to look at options when I'm pricing them. And again, data and all that is definitely important to know and understand, but I'm not too focused on it. I want to focus on the intrinsic value that I can potentially capture and just make sure, you know, the numbers make sense as an investment opportunity. If before you even enter a trade or any type of business, if, you know, the numbers don't make sense, why would you even do it? If someone's telling you, hey, you got to invest $5 per product to make 10 cents, I don't know why anyone would put up that much capital. If they tell you, hey, you can buy these products for 25 cents, sell them for 250, that sounds feasible. That sounds something I'm interested in. But that's pretty much it about how I go about options. Try to get something that's in the money or will be in the money. Play with the premiums. But that's pretty much about it. Do you have any questions how this works or just anything in general about options based off of what I kind of described here? And then I could pull up the chain too if you guys want to see actual prices. So for example, how can I put these side by side? So here it is. So for example, the 670s for 1017. You can see here they were trading at 608. If we look at the actual chart, um, 655. What date was that? September 25th. Let's go to September 25th on here. On September 25th, these contracts for the 17th were trading roughly at 1697. So based off of what I, you know, kind of described to you guys, it's about right. So I assumed into 655 contracts would roughly be priced about 1.5k at time of expiration. The last time they were there, it was at 1697. Contracts had a bit of time left, etc. But again, all I'm really focused on is this drop, and if that does happen, these 1017 puts would deliver those premiums potentially up to you know, 15 bucks or whatever, depending how much premium is left and all that. But this is essentially what I'm looking for, or how I try to plan my trades. So let's say again, I'm looking for SPY put to make sure numbers make sense, premiums, whatnot. You take your trade, and then, you know, you have your risk to reward and everything. Does that you, DJ, you've been trading long enough, I'm pretty sure you understand that, right? Stock goes down, puts go up. Stock goes up, calls go up. So pretty self-explanatory. So this is your 670 put that I was, you know, discussing here. This is a valid trade, by the way. I get it. I'm using this as an example just for you guys to see, but this is an actual trade you guys can try taking. 1017 670 puts. If we get something like this as described, that's a pretty decent trade. So both an example and an actual trade you guys can take if interested. Do you guys want to cover anything? Do you guys have any questions, since it's just you two right now? I kind of want to give you guys this time focus, since you guys actually woke up, you guys are here. You know, everyone else that didn't show up, you know, nothing against them, but they can rewatch the recap. But again, you guys are here. If you guys want any specific questions answered, just to go over anything in general, any specific stock, you know, feel free to let me know right now. You guys good? Wait, hold on, bro. I just think you're talking. I see your text. Hold on, guys. I'm not sure what's going on with my freaking headset. This is the second time it turns off on me. All right, my bad. I could not hear you guys the second time my headset turns off. Let me see. Try again. All right, I still don't hear you guys. Hold on, my bad. What is going on with this? 1 second. All right, that's odd. I see you guys talking. I see the headset. Just hold on. Not sure what's going on. Is it my settings? All right, that's odd. This should be playing right now. Okay, I think I'm back. Let's try again. Let me hear one of you guys. Perfect. My bad. I was like, what the? Because I didn't know until after I noticed you guys were speaking on the mic. I'm not sure what's up with my headset. Sorry about that, guys. Okay, so with that being said, do you guys want me to cover anything specific with you two? Mm-hmm. Mm-hmm. Yes and no. Because of this, yeah, I mean, yes, it would. So let me show you again the same exact setup I kind of just went over, just so you could get an idea of how I would manage this or how you can execute on this. So first things first, based off of simply the SPY chart, what I'm looking into next week, like I said, as long as we remain below previous daily highs and continue pushing lower, it's going to be a valid trade. So that previous daily high is going to be 670.74. You can see it on your chart, or you can write it down, whatever you got to do. But that value I'm watching into next week, again, it's 670.74. That is where the market structure shift happened. Um, you can have a market structure shift, just to let you know, you can have a structure shift on the 1 minute, on the 15 minute, 3 hour, daily, etc. But the minute we had the structure shift on the daily was into that daily high, right? So we have a daily high put in, and then we have it broken below. So that is your structure shift, because we were heading higher, 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 higher. The minute we break below previous highs, that's a new low. So that's where the term structure shift comes from. Once the structure has shifted, we are now putting new lows. The only thing I need is to, one, respect that high that I set into 670.74 and continue driving lower. At any point, if we get back above that level, like you said, it is then invalid and you would exit the trade before you can, potentially take some losses. But that's all it is. 670.74, stay under and continue driving lower. That's no invalidation, no reason to get out, continue holding. If at any point it gets above, that's your invalidation. As far as premiums go and how to manage premiums, like I said, we entered already, and I did not bottom take this, but I do have a decent entry. One thing I want you to pay attention here, if you're trying to take this trade, you told me, how do I manage drawdown? If I put, let's say 10 contracts, 100 contracts, that's a decent amount of money. So what you should focus on, or what I focus on, is your range. This is your daily range. Friday, where'd it go? I thought I had drawn. Oh yeah, here it is. So you have your Friday lows. You have your Friday highs. This is your entire daily range, or your playground, your work zone, whatever you want to call it. Your 786 is at 506, and your 0.5 is at 568. Ideally, I like to buy at GP or under. So realistically, I would not buy it above these prices. If next week on a small bounce on SPY or whatever, you see 506 to 542 on those contracts, that's something I'm okay with buying. The problem with buying a breakout, like let's say here or even higher, is if we do reject into these highs, let's say 670, and we reject all the way back into the base, you're you're talking about a 25% drop just from the top of the range breakout to the base at the GP. From bottom of GP to base, you're talking about 10%. So like I said, I like entering into areas like GP. Why? Because if we do see a bit of drawdown back to the base, it's roughly 10%. As opposed to entering up here into the breakout, if we see a retest of the base, you're talking 25%. That's a big difference. So it's really going to come down to having good entries. You missed the entry, assuming that was the top on Friday, you missed the perfect entry. And to be honest with you, you're not going to get perfect entries every single time. Not even I get perfect entries, especially on swings. You might enter a swing a day later. Premiums might be up 15%. They might be up 30%, whatever the case may be. So like right now, 50% roughly on the premiums from the low to high. Premiums might be up a bit. And generally, I do not like to chase. I'll tell everyone, do not chase, do not chase. But there are times where, you know, for in this example, 50% is a lot, sure. But then when you look at the potential probability, which is over 250%, paying that 50% that we already ran, or 25 or whatever the case may be, doesn't seem too terrible. Does that make sense? So definitely don't want to chase. But this specific setup, I think, again, let's see where we open. Ideally, you would want to buy somewhere around here. If you're buying it $6 or higher, not terrible. You're just, you know, overpaying a bit on the premium. Can still make money, just overpaying a bit. So you want to be mindful of where you're entering the trade on the chart. And like I said, if you can enter down here, that's going to be probably a lot better in my opinion. Doesn't mean that, let's say we open here, for example. Let's say we open into 650. Does that mean that, oh, all right, well, you can't trade for the next 2 weeks because you already missed the entry and you're going to miss the entire move up? Not really, you know. It sucks you didn't get the best entry, but it doesn't mean you can't capture this entire move to the upside. So how do you usually enter? Because you're saying, you know, if you want to enter more than one, you know, sizable position, I generally don't enter all at once. So that's one thing you can try. Let's say you do enter here into the highs. Let's say you enter 5 contracts or whatever for 2.5K, roughly. So let's say you enter 5 contracts here into 2.5K. You see a bit of drawdown into these lows. You could add another 510 down here, get a better cost average. And then once you do get the bounce, all contracts essentially go profitable. These are going to now be green and these are going to be super green. So never enter all at once. That's definitely one thing I would advise you. But 2, just kind of look at where you're entering on the chart. Not just the, where'd SPY go? Not just the actual, you know, stock chart, but also go ahead and take a look at the specific option you're trading and see where you are, you know, in that path. If it's already too overextended, probably not the best idea to chase. But I'm not telling you, like I said, if we open 650, it doesn't mean the trade is invalid. You can still take it, just understanding where you are in the premiums. Does that kind of answer? Do you have any specific? I love helping you guys. So if there's anything like, hey, I didn't understand this, or I want more information on this, like, you know, feel free. I don't know if my, you know, explanations are what you guys are actually looking for. So it's gonna depend what time frame you're focused on. Because to give you an example, this. As long as you don't get a 3-hour closure above, I think you're okay. So let's pretend this wick went up a little higher. You see how this wick didn't get back above 670? Let's pretend it did. Let's pretend this wick came up to here. That would still be okay in my books because if you see, the body closed below. So if we would have wicked way up here, and then reverted lower, that's okay in terms of the 3-hour. I would not call that an invalidation, but that's why I'm telling you the time frame, you know, really matters. Because again, if this wick did come up here On a smaller time frame, that would be your exit and validation. But if you simply waited, 30 minutes more, an hour more, whatever, you would have seen we reverted back below and the body closed below that level. So I prefer candle closes, just to be patient, just to be, better safe than sorry. But at the same time, you need to understand there's different time frames. So right now I'm watching the 192. The 192 here, for example, we never got a closure above here. If you see this, we never got a single closure above that level. But if I was trading, solely on the smaller time frame, we wicked up there. So based solely off the smaller time frame, yes, quote unquote, it was breaking out. But when you see the actual closes on the 3 hour, we not once were able to close above that level. If I come down to a 45, you see we did get closures above there. And then you have a solid structure shift here on this 45 minute and a drive lower. So that's why I'm telling you, I don't want to give you a specific time frame or a specific rule, because it's going to, matter based off what time frame you're on. For example, the daily, you might be saying, oh, well, we just broke out on the daily, new highs, we're going to 680, whatever the case may be. But then you look at the daily closure, we closed below. So it's not one specific answer I can give you. The one thing I will make note of is, like I said, pay attention to what time frame you're on. If it's a 3 minute or 12 minutes, something smaller, just understand how fast price can fluctuate. For anything like that, I like to rely on higher time frames, something like a 45 minute or maybe a 3 hour. But again, you got to be patient with those. And the potential problem is, let's say you're green, you give your trade 45 minutes. In the next 45 minutes, you might not be green. Or let's say you're red, you give your trade 45 minutes. The next 45 minutes, you might be green. So it's more so along the lines of patience, and just kind of being patient. But again, if you have, let's say, this level and we have two consecutive 12-minute candles, two consecutive, not what I wanted to do, two consecutive, bullish candles, just, crushing your premiums. I'm not telling you just to be patient and sit and watch your premiums get chopped away. That's not the case. I'm just meaning be patient when it's something more so like this, where it's kind of just teetering around levels. You don't want to do too much. Just be patient, see what actually happens. But if it's something where you're completely getting blown out the water, do not be patient. Move fast and try to preserve your capital as best as you can. So I'll be here making commentary and everything, kind of giving you guys heads up, get out, stay in, what I'm doing and all that. But it is going to be time dependent. Like I said, you're going to have very different results if you're using solely the 3 minute, if you're still using solely the 12, using solely the 45, which is why I like using a combination of all time frames. And it's also going to depend on you, how fast you want to trade. Some people I know hold scalps under 3 minutes, sometimes even 30 seconds, and they're out. I'm not that fast. Can I be? Sure. I don't really enjoy it. I don't think there's too much money to be made. I like focusing on the bigger ranges. Like I said, I'm not here to knock anybody. You can make money millions of ways in trading. But what I personally like, my bread and butter, my sweet spot, is going to be those, short to medium amount of time swings. Sometimes it's a couple hours, sometimes it's a couple days. But I'm not really looking too much for those fast scalps. Do I take them here and there? Sure, when the setups are really clean. But it's not something I'm looking to put a big amount of money on, just because better safe than sorry. The slow route is the best route. Just trust me. So we'll see. Like I said, I'll make comments and I'll help you with that. But it's gonna go down to the time frames, honestly. And like I said, it's dependent. Sometimes you might get one signal in a 3 minute, conflicting signal on a 12. So I can't give you a specific answer, but if I had to focus on just one, I would probably do the 45 minute and the 92. So the problem with that is, let's say you're waiting for a 45 minute closure. So this is a trade I actually took on Friday. We have a new 45 minute open right here. So these boxes you see are 45 minute ranges. Let me get rid of some of this stuff. So this box here is 45 minutes. Come on. This box here is 45 minutes. This box here is 45 minutes. Does that make sense? And then, whoops, no, it is not. That is a 3-hour box. Excuse me. I'm on the 45-minute time frame. That's why. Let's go down to a 3. So there we go. This box here, let's clean it up a bit. This box here represents 3 hours. So this is your start, this is your end. That is from 6 a.m. to 9 a.m. So this is a 3-hour block. And then here you have your 9 a.m. block start, your 3 a.m. block end, your 9 a.m. through 12. So 6 to 9, 9 to 12, this is the 3-hour block. These smaller subsections you see here are 45-minute subsections. These here, 45-minute, 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 and so on. So one thing I like to focus on is 3-hour blocks, like this entire zone, and then divide them into 45-minute subsets. So if you look at this as one block, you had one clean trend to the upside. If you look at this 3-hour as one block, you have one clean move to the downside. When you divide it into subsets on the 45, you can see here we had the start of the 45-minute. You had one clean drive all the way to the upside. And then within that same 45-minute coming into the close, you had to pull back pretty much all the way back into the base right before the next 45 minutes started. So if you're trading strictly based off of the 45-minute candles, one, you could have caught this entire buy and exited your, the trade within those 45 minutes. Then you come into the new 45-minute candle. You get an entire new buy, perfect from entry to from start of the 45-minute candle to close of the 45-minute candle. Next 45-minute candle, you get a bit of a pullback. And then again, same topic. You get a new fresh 45-minute candle, another drive higher. So the point I'm trying to make here is by simply focusing just on the 45-minute candle openings and closings, you're going to get some pretty solid results in terms of trading. So the 3-hour blocks subdivided into 45-minute blocks have given me some pretty good results. And that's actually how I executed the puts, which paid over 500%. So same thing I just, damn, my voice is going away. Same exact topic I just discussed with you guys. Again, here we have a fresh 45-minute candle. You have your previous bottom range on the 45. So this is your previous 45, right? This is your previous 45-minute candle here. You have a fresh 3-hour candle. So one, we have a fresh 3-hour and a fresh 45 after this. So you let the 45 minutes set the range. On the next one, the minute we breach support of the previous 45, that is your market structure shift for those sells. This came at 10 a.m. The real entry I took like at 9:36, I think. So it was probably around here when I actually entered on the breakdown of that level. But if you wanted to take it until the fresh 45, that could have worked as well. So same thing, fresh 45, clean drive lower, then you get a new 45, another drive lower, and then bounce off the lows. But focus on the 45 minutes and you'll do pretty well. But yeah, this is one trade I took on SPY into those lows on Friday. And again, it's all based off the 45. Like I said, forget everything, only execute based off of the 45-minute candles. You'll do very well. This could have been one trade. This could have been another trade. This could have been another trade. So within those 45-minute candles, you could have caught 3 super clean trades. Maybe even other trades, but generally I don't take more than 2-3 trades a day, if that. So let's say I scalped these buys, which I didn't. I could have scalped the buys on the upside, then taken the sells, called it a day. I won't force more than 2-3 moves a day. Some days you won't even get 2. Some days you get more than that, but I'll never force them. If I get 2-3 moves in a day, I'm done. But that's how I like to execute based off of those 45-minute candles. And then if you have, a busy schedule with, business, family, whatever the case may be, it allows you to preset and pre-plan for your trades. So you already know For example, the 6 a.m. to 9 a.m. block is one trade. The 9 a.m. to 12 p.m. block is another trade. So you can tell yourself, okay, well, I have this I got to get done in my daily life. I know a trade is going to present itself at the opening of the 10 a.m. block. So I'll hop on the charts from 10 a.m. to 10:45, or whatever the case may be. But I just think it helps you plan for your trades a little better since you have specific times and specific prices you're looking to enter at. Yeah, so you don't have to trade the whole day. Pick your time frame. If you want to trade that 6 to 9 block, go for it. You want to trade the 9 to 12 block, go for it. Um, Generally, I like trading NY only. If that doesn't fit your schedule, you tell me, hey, I want to trade Asian session, I want to trade London session, that's fine. It's gonna be the same exact thing. You have your 3-hour blocks divided into 45-minute blocks. If you really want to go over the whole thing, um, those subsets are gonna make up your entire trade day. So you have your London session block here, your 12 a.m. Look at this range, by the way. This is more than plenty. You could have traded that 3-hour block, made a killing, and you're done for the day. So just pick 3-hour block you really want to focus on. This is one. You could have taken this 3 a.m. trade, 6 a.m. trade, don't matter. Like I said, it repeats every single day, every day of the year. So pick your block and stick to it. If you want to trade the 9 a.m., trade the 9 a.m. You want to trade the 12, trade the 12. But again, it's just a repeating pattern. 3 hours, 3 hours, 3 hours, 3 hours, 3 hours, don't matter. Pick a time that works for you in your daily schedule. Like you, Robert, are you still in Spain? I'm assuming you are, right? Okay, see, so you're on a completely different time schedule than we are. If trading that schedule doesn't work for you, pick a time that fits. Oh, it does? Okay, that's fine. So, like I said, just pick a slot that works for you, that you can be committed to, that you can be consistent on. I much rather you come onto the charts for just 3 hours a day, just an hour, just whatever amount of time that works for you. But that hour or those 3 hours that you're on the charts, you're hyper focused. You're trying to make perfect entries, which again, you're not going to be perfect ever. Yeah, you can get perfect entry here and there. But the point I'm trying to make is when you're on the charts, I want you to be 110% focused. When you've been at the screens for 8 hours, for example, you start to get distracted, not as focused, your results go down, etc. So pick a slot that works for you, whether it's an hour, 3 hours, whatever. Stick to it, be consistent, trying to be on the charts every day at that time, and executing whatever you get within that time frame. So you need to dictate the market. The market does not dictate you. So you tell the market, hey, this is the time I'm willing to work with you. This is the amount of capital I'm willing to invest. It's not, oh, the market's falling, let me go run into a trade. Like, no. You tell the market, hey, these are my conditions. Work with me within these conditions and we can work. But you're not bending for the market. The market should bend for you. Yeah. So let's put drawings back up. So pretty much what I was watching, which I don't know where my drawings went, but pretty much one, I had been watching or expecting sells the entire day. I caught this sell. Let's go down to this is fine. So I caught this sell pre-market. I wake up usually around 3 a.m. on trade days. So I had caught this entire move. So I caught this whole move. And coming into the open, before the open, I told everyone, hey, look at how much the sell's already paid. I'm not going to force the sells. I already took profits. I'm going to be patient and see what we get into the open. Into the open, we got a bounce, which again, I did not take it, but I was not looking to chase the upside because I had just caught all this. So I said, I'll be patient. If we sweep the highs and, get another short opportunity, I'll take the shorts then. But into the open, I'm just going to be patient. So sure enough, they push back into the highs, sweep the highs. Then eventually I waited into the new the new 3-hour candle. When you get the new 3-hour candle, you have a preset range to work with. What does that mean? I have a high and a low and different areas to watch. So depending where you took it, you could have used this as your trigger into that 10 a.m. candle. But like I said, I took it slightly higher into the 45-minute open. At 9:36 was my actual execution. So you could have had your trigger. Like I said, it's not a big difference. It's about a 2-point difference. So whether you executed based off of 667.56.1 or you executed based off of 6754.6, it's a 2-point difference. It's what it costed you, a couple dollars on the trade, but it's not a huge deal. So goes back to the same thing. You have your 45-minute open into the new 3-hour candle. Again, like I said, I was already expecting the sell, so I was just being patient. When we did get the structure shift here, so again, you have your 45-minute open here, and then you have your structure shift when we give up these levels. Do you see that? So when that structure shift happens into the fresh 45-minute, all I did was take the 6,700 puts, which are here, and I had already been watching these the entire day. So I recorded the session on Friday. We had been discussing it since before the move even happened. So everything's there. I had told everyone, hey, we're targeting the 6,700 puts. If we can get them, etc. This is a potential profit-taking area. So I told them this would be where we would take profits. We got that and a little over. So the high of the day was like 810. Majority of the contracts for me, I was out between 4.6 and 5. I didn't hold them for that extra push, but that's totally fine. So again, coming into this zone, so 9:30 is when the 45-minute candle opened. I was in by 9:36, so within 2 3-minute candles, and that is right here. So you have your 9:30 open, new 45-minute by 9:36, which is here. I had entered the trade. It was trading roughly around 50, 60, depending where you got in. So about a 10-cent spread, not too bad. But again, if you would have entered anywhere here, 50, 60 bucks at that 9:36 mark. And again, you don't have to be precise. If you entered at 9:30, 9:36, all the way up until 10, you could have got a decent entry. So we had been ranging for about 15 minutes here. And then finally, you did get that breakout, which squeezed us into this next subset range. So when we were trading into this zone, they had already paid over 100%, but nothing substantial. We were just chopping in this range, as you can see here. And then when we did get that next breakdown lower is when you had that decent pop into the take profits that we had discussed. But that's pretty much how I executed on that, and it paid pretty well. If you wanted to take your 100% or whatever once it was delivered into the zone, you could have definitely done so. But we pre-planned to hold into that 4.6 area. And again, execution was simply based off that 45-minute, but we had been not pre-planned, but we were patiently waiting for that sell setup. So it's not like we guessed, we had been waiting. But as far as executions go, it was a market structure shift on the new 45-minute candle. So going into this week, like I said, it's pretty straightforward. As long as we stay below previous daily high and continue driving lower, we have straight liquidity to the downside for the most part. I would not be surprised if we do get a leg down. Whoops. First leg down, maybe into Monday, Wednesday. Between Monday and Wednesday, we get leg down. They try to bounce it a bit into the end of the week, and then we get some continuation lower into next week. That's definitely a possibility. But like I said, I'm taking it day by day. You guys will have daily levels updated every day before the open, so it's not like you're blindly thinking, oh, are we going long today? Are we going short today? No, the direction, the price levels, targets, everything will be dictated pre-market. So for example, right now, assuming nothing changes, we open pretty flat on the futures. I'm expecting something like this, somewhat of a pullback, and then maybe a bounce into midweek. Again, it just kind of depends where we open. But as far as me thinking the markets are headed higher, I definitely do not think so. If we do get a bounce this week, it's going to be after a bit of a drop, relief bounce, and then put in new lows. But again, it just kind of depends how they want to deliver prices. But me looking for new highs, probably not the case here. So we'll see. There's a lot of good setups this week, so trust me, I think you guys will be more than fine if you guys show up to the room on time. Rossum, I don't know what your schedule's like. If you can't make it, that's fine. Calls will be recorded. I know you said you usually come in a little later. That's cool. But pre-market. So generally, I open the room at 5 a.m. I'm up at 3 a.m. Pacific Standard Time. So if anyone, I tell everyone, if you guys want to come in before 5, kind of see, how I do the pre-market prep, what I'm looking for, and all that, that's fine. You guys are welcome to come join me and do the work with me, so you guys can learn along the way. If not, I don't mind. You guys are welcome to just come in at 5. So from 5 to 6:30, it's about an hour and a half that you guys can come in and prep and see the entire, daily plan. The reason I'm doing 5, uh-huh. Oh yeah. So like I said, I'm up at 3 a.m., 3:30. If you want to join me at that time, you're more than, welcome to. Yes, everything is here in Discord. Everything's here in the live in Discord. Everything's recorded. Any updates? I'll go over this real quick while you're here. So you have a couple sections. Chat is primarily where the intraday stuff is going to happen. So on Friday, for example, when those SPX puts hit a decent amount of money, Jinder was no longer in the room. He had stepped out. He works. So he was not in the live at the moment. This was at 10:51. I was basically just alerting him. Where is Spy? I was basically just alerting him the contracts were up a lot so he could take some profits. So 10:51 right here. So literally at the lows. So here into the lows, those SPX contracts were up a lot. And I just, hey, Jinder, sell your contract. So majority of the commentary or all the commentary is going to, one, be in the live room. The chat is just going to be used when necessary. Like someone was asking for potential swings. I sent them my watch list for the options. And then here, I just told him, hey, check the contracts. He wasn't in the room. But like I said, this chat, you can use to ask questions. We'll send information and whatnot. But primarily, everything's going to be done within the live room. And then scalp and swing trades haven't been posting too much, but you will have your scalp trades and scalps, swings and swings. Charts is where majority of the work or data is going to be. If you want to look for any specific name, you can use the search bar. You can just come in and search for whatever you'd like. But everything is in its own section. So if you want to see the UVXY write-up, UVXY has its own section, success, and you'll have daily updates. So Apple, for example, you have an entire write-up on Apple. Then you have your update. No BSL sweep yet, which is a trade I discussed with you. So this was when we were a lot lower. We're now trading up into like 258, right? 259. Same thesis. BSL sweep, then revert lower. But the reason I wanted to make it in this thread setup is so you can follow the action along. So this was original write-up since 9/28. So I've been waiting for over a week for that buy side liquidity to be swept. AVGO, for example, where is it here? We mentioned so loaded 345s, 355s. This is when I mentioned I went long on AVGO. This was 9.9. It was trading around 345, and then it hit a high of like 375 or 380 or whatever the case may be. So that's kind of how this is set up. You're gonna have your write-ups, so you can follow along essentially. I feel like when I would send random charts in the room, you just have a bunch of random senseless charts and everyone can't really follow along and they get lost between messages. So this way you could kind of follow along as the price action unfolds. If there's a specific stock you don't see here, you would want to see updated or you want to trade yourself, just let me know. But this is kind of how the charts are set up. And then I have a couple micro, macro megas. So essentially you have your charts broken down into 3-hour subsets, and then you have your dailies, your weeklies. But don't want to make it too complicated. For the most part, like I said, live room, chat, and then charts is all you need. But it's kind of still in the works. So that's where everything's going to be posted within here if you have any questions. But yeah, live every day and live. Morning notes I'm going to start as well. So I'm just trying to keep it a little organized. That's pretty much it. And then I have some books. I don't know if I've shared these with you before, but if you're interested, yeah, there's a lot of stuff in here. But pretty much it. All right. Well, I'll be here tomorrow. Like I said, I'm probably gonna start myself around 3:30. If you want to join me at the time, great. If not, the official start is at 5 a.m. Um, I wanted to do starts at 5:30 for everyone. The only reason I'm doing 5 a.m. is because on news days, like when we have NFP, CPI, stuff like that, I would want everyone in 30 minutes before at 5, just so we could prepare for those news events. So I just did a standard 5 a.m. And like I said, whoever wants to be here can be here, great. But to each his own. Yep. So hmm So the official start is at 5 a.m. But like I said, if you're awake and you want to come in, just shoot me a DM. I'll come in and say good morning first things, but you can let me know. Hey, I'm awake. You mind if I join you? Whatever. Like I said, you guys are welcome. Perfect. And I think you'll get the most benefit out of this because, like I said, the real learning process is in the work itself. The trading is simply the aftermath of the results and the planning from before. So, yeah, I'd be glad to have you, give me some company. Well, there it is. If you're up, come learn some. Yeah, like especially you, DJ, since you're so new to training, like I just be slow and steady. Whether you're making $500 on a trade or 5K on the trade, it's the same exact preparation. It's the same exact thought process. Everything is the same. The only thing that really changes is obviously the psychological aspect behind it. Because if you have $500 risk, you're like, nothing too bad. You kind of chilling. If it goes down 10%, you're talking $50. Versus when you put on those $5,000 swings, you're down 10%. Now you're down $500. So the trade itself is the same exact thought process, management, everything. It just starts playing those mind games with you. But once you have the process and everything down, you've been doing it for so long, the numbers, you kind of just accept it, like it's part of it. But yeah, once you learn that the recipe per se, you can cook one cake, you can cook 5 cakes, 10 cakes, whatever you really want to do. Just one day at a time. Don't say, hey, I made a cake today, tomorrow I'm gonna make 10. Like, no, sell that cake every day for a week, and then down the line, little by little, the bakery gets bigger. Don't try to uh, think of it from a logical perspective. If you have a business, whatever the business is, whether you're selling tacos, you're selling clothes, sneakers, don't matter. Any business, yes, the goal of the business is to grow, but at a sustainable rate. There's no business like Dave's Hot Chicken, for example. I don't know if you're familiar with them. When I started going to them, they were literally in a parking lot. They had maybe 3 tables. They had like 2, 3 fryers, one for the fries, one for the chicken. Like it was a super small venue in the parking lot. Literally just 2, 3 workers. That's it. They didn't even have tables for the customers to sit down. You would get your food takeout. You would take off. Right now, and I'm talking less than 10 years ago. Right now, they're worth more than $1 billion with a B. Billion. They literally started opening restaurants. They got franchised. They have locations in Canada, locations all over the US. The point I'm trying to make with this is for years, they kept that super small service. They were making a killing. They couldn't even keep up with demand, but they kept their service small with, good results. They take care of the chicken, everything was good, etc. Later down the line, you get your first restaurant, your first physical location. It was, after years or, that they had been selling. After a whole year or that first location did well, all right, you get your second location. Little by little, the growth, comes. It didn't come overnight. That's the point I'm trying to make. They're worth $1 billion, but it didn't happen in 1 year. It didn't happen in two. It was slow, continual growth that allowed them to get there. If from day one, you say, all right, tomorrow I'm gonna open 100 restaurants. Like realistically, that's not how growth happens. It's slow, overnight, overnight, overnight. Before you know it, now they have locations all over, the US and even other countries. But just take it slow. Don't try to, say I need everything today. If you make a little more than yesterday, a little more than yesterday, As long as you have consistency and small growth, continuous growth, that's optimally, all you can strive for. Because if you try to be over ambitious, it's kind of like a you can't really run or fly before you crawl. So learn how to crawl. Once you get better at crawling, you take your first steps. Then down the line, you can talk about running and flying. But don't get ahead of yourself. Just take it one day at a time, and I think you'll be straight, bro. It's like the gym. You know, you didn't step in the gym and say, "Hey, I'm lifting 100s today." Like you start with your 25s. A month down the line, all right, I can hit 30s now, 35s. Little by little, you get that growth. Shit, you step in the gym day one, you say I'm gonna curl these 100s. You already know what's gonna happen, bro. You're gonna end up fucking injured. But yeah, just take it slow, bro. But you'll get the gist little by little. All right, I'm gonna probably end the stream right around here. Do you guys have any other questions for me? If not, like I said, we'll pick up tomorrow morning. I'll do a small update after futures is open. Kind of see how that goes. But other than that, I'll be here tomorrow. All right then. Say less. I hope you guys have a blessed Sunday. Enjoy the rest of the day, and I'll catch you guys tomorrow. All right, for sure. Take care, guys.